Hi friends, welcome back to my channel. Today I'm going to discuss about the small business loan. Best small business loan. Get support to help you manage cash flow and grow your business. Small business loans are an integral component of the business world since business owners rely on them to invest in new equipment and supplies, cover payroll, or manage cash flow while they wait for customers or clients to pay. With a small business loan, business owner and entrepreneurs can access a lump sum of cash or line of credit, which they can use to remain operational and continue growing their business for years to come. Interestingly, the best small business loan available today are offered by the online lenders and not by the traditional bank. This is because, by and large, online lenders can offer the most convenient application and funding processes along with the competitive fees and best loan term. 20 of the top small business loans and lenders available today to find options with fast funding, transparent pricing, and the flexibility most small business owners need. Before you apply for a small business loan, please watch my video thoroughly. The 6 best small business loan of 2022. Best overall, Cabbage. Best revolving line of credit, Fundbox. Best for microloan, Kiva. Best for SBA loans, Fundera. Best for someday funding, OnDeck. Best lender comparison site, Lendo. Best of overall, Cabbage. We choose Cabbage as best overall due to its fast funding and flexible payment option. We also choose Cabbage based on its comprehensive package of tools for your small business, including a business checking account and its own mobile app. Pros: transparent qualification requirement, no application fees, multiple small business loan option available, access to the mobile app, business checking available. Cons: you need to be in business for 1 year. You must have at least $4,200 in revenue each month. Founded in 2008, Cabbage is the technology company that aims to provide cash flow to business of all size. While many offline companies focus on the small business lending, we believe Cabbage stands out due to its plethora of small business loan options and its added feature and benefits. Cabbage offers a variety of small business loans and option for a line of credit, including both unsecured and secured option. You can also apply for industry-specific loan for tracking, pawn shop, retail, and more. Cabbage prides itself on its easy online application process and fast funding for those who are approved. Loan amount from Cabbage vary depending on the type of loans you apply for. Cabbage also offers business lines of credit up to $150,000 and online loans in amount from $500 to $150,000. Other loan types might offer larger limit. Cabbage funding also offers repayment terms of 6 and 12 months, depending on your needs. With Cabbage, there are no hidden loan fees or prepayment penalties. Either you will pay a monthly fee, but they are upfront about it. Next, Fundbox. Fundbox focuses on offering lines of credit for business owners, and they make it possible to get pre-qualified online without hard injury on your credit report. Their focus on business line of credit makes them an expert on the particular type of small business funding. They offer decision in minute as well as funding as soon as next business day. Pros: the pre-qualified online without hard injury on your credit report. Get a decision in minute. Only borrow what you need, unlike a small business loan that offers a lump sum. Cons: lines of credit are only available for up to 1,50,000. We choose Fundbox as a lender offering the best revolving line of credit, which allows you to qualify for specific amount and borrow only what you need. Fundbox was founded in 2013 and the company uses technology to facilitate B2B lines of credit with the goal of helping small business achieve significant success. Lines of credit from Fundbox are only available in amount of $150,000, but you can get pre-qualified online without completing full loans application. Once you apply, you can get a credit decision within minutes, and you are under no obligation to accept the loans fund. Because Fundbox focuses on lines of credit, you get the chance to borrow only as much money as you need. Fund can transfer from your line of credit to your business checking account as soon as the next business day. The provider gives you the option to save money by paying off your balances early and ahead of schedule without any payment fees. Fundbox lets you see the fees for your line of credit upfront, and they will automatically debit your bank account to pay your amount due. So you won't have to think about it. You get the option to repay your line of credit over 12 or 24 weeks. Next, Kiva. Kiva is the best option for small business owners who will need to borrow a small amount of money. Their microloans currently come with a 0% interest rate, and you can borrow up to $15,000. Pros: borrow money with no interest. Get a chance to market your product to a growing community of Kiva lenders, currently 1.6 million strong. Repay your loans for up to 36 months. Cons: you can only borrow up to $15,000 with Kiva. It can take 30 days or longer for your loan to be funded. We choose this lender as the best option for microloans based on the fact that you can borrow money at 0% APR and repay it over 3 full years. Founded in 2005, Kiva aims to help underserved communities and their members qualify for the small business funding they need to get their dreams off the ground. So far, 2.1 million Kiva lenders have funded more than $1.74 billions in loans to more than 4.3 million borrowers in 77 countries around the globe. Interestingly, Kiva is not a bank but is instead a peer-to-peer lending platform. Kiva loans are geared to disadvantaged entrepreneurs. So, investors who lend money through the platform get the chance to help people around the world. In terms of their loan product, Kiva only lets you borrow up to $15,000. You can apply online in 20 to 30 minutes and earn the ability to advertise your funding project on their marketplace within 30 days. You get the chance to repay your loan over 36 months. Kiva also lists easy requirements to qualify, including living in the US and being at least 18 years old. To qualify for a Kiva loan, you also have to agree to use your loans for business purpose only. Fundera. We choose Fundera as the best option for small business administration loans due to the fact that it offers most SBA options, including loans through the popular SBA 7A loan program. You can only for an SBA loan directly on Fundera with your loan funded through a variety of top SBA lenders. Some pros. Fundera offers an array of business loans and lines of credit, including loan offers through the SBA. Compare loan options through multiple lenders in one place. Gauge your ability to qualify without a hard inquiry on your credit report. Some cons. Fundera is a small business marketplace and not the direct lender, meaning the company won't actually fund your loan itself. Credit score of at least 550 required. Collateral required for some SBA loans and loan amount. Fundera is an excellent option for consumer hoping to qualify for an SBA loans, mostly because it lets you fill out a single application and compare multiple SBA loans options in one place. Founded in 2013, Fundera is a loan marketplace instead of direct lender. This means the company connects small business owner with the best small business loan and lines of credit on the market today. But it does not lend money itself. Because Fundera is a marketplace, it can offer nearly any type of business loan or line of credit available today. These include loans through a small business administration, which tend to come with flexible repayment term and affordable interest rate. Loan amount and repayment term vary, but it's possible to qualify for an SBA loans in amount up to $5.5 million. You may also be able to repay your loan over a period of 25 years, although it can take 2 weeks to get your loan funded. More than SBA loans may require collateral, and that's especially true for larger loan amount. Next, OnDeck. We choose OnDeck due to the fact that they offer small business loan with funding as soon as same business day. This can be crucial for business owners who need fast access to cash to keep up with business expenses or pay for an important price of equipment right away. Some pros. Funding available as soon as the same business day. Borrow up to $250,000 with a small business loan and up to $1 lakh with a line of credit. OnDeck is a transparent about loan details and eligibility requirement. Cons. Minimum personal credit score of 600 required. Applicant need at least 1 year in business with minimum $1 lakh in annual business revenue. Since its founding in 2006, OnDeck has grown to become one of the most prominent small business lender offering capital on the market today. We choose OnDeck as best for someday funding due to its easy online application process and rapid approval and fulfillment of your small business loan. Since its founding in 2006, OnDeck has grown to become one of the most prominent small business lender offering capital on the market today. We choose OnDeck as the best someday funding due to its easy online application process and rapid approval and fulfillment of your small business loan. OnDeck makes it easy to qualify for lines of credit. Its amount for $6,000 to $1 lakh or small business loan in amount from $5,000 to $2,50,000. Repayment term on small business loan are available for up to 24 months and will benefit from transparent pricing and no prepayment penalties. Meanwhile, you can repay off OnDeck lines of credit over 12 months. Plus, you get the benefit of borrowing only what you need. Either option can work for small business owner who need access to capital, and both type of funding let you apply and receive a decision within the day. OnDeck list some basic requirements to qualify for business loan, which include a minimum personal credit score of at least 600 for a long-term loan. You also need to be in business for at least 2 years and you need to have at least $2,50,000 in annual business revenue to qualify. Next, Lendo. We choose Lendo as the best loan comparison site based on the fact they let you compare loans option from more than 75 lenders in one place. More than other marketplace site, you can also have your loan funded in as little as 24 hours, which can be a major boom for business owner who need cash fast. Some pros: compare loans offer more than 75 lenders, funding in as little as 24 hours, small business loan, SBA loans and business lines of credit available. Some cons: Lendo does not lend money directly. Eligibility requirements vary depending on the lender. Lendo is another loan marketplace, so it won't be lending you funds directly. And we believe they shine in this category, since they let you compare loans offer with more than 75 lenders in small business space. Having the chance to have lenders complete for your business is the best way to make sure you get a small business loan with the best rate and terms you can possibly qualify for. Lendo was founded in 2011, yet it has grown dramatically since then. So far, they claim to have funded over 3 lakhs business loans worth more than $12 million, $12 billion, and they don't plan to stop anytime soon. In terms of their small business loan offering, Lendo lets you borrow between $25,000 to $5 lakh, depending on your need. You can repay your loan over 1 to 5 years, and your interest rate could be as low as 4.5%. Lendo has just 15-minute application process, and you can get a decision on the same business day, making it an efficient place to shop for a loan. What is a business loan? A business loan is a type of loan business owner take out in order to access funds for inventory, payroll, and other business expenses. Business loans come in many different forms. Although traditional small business loans tends to be offered in one lump sum and with a fixed monthly payment and interest rate. However, there are other type of funding available for small business. Lines of credit are a popular option since they let business owners borrow only what they need. Further, invoice factoring can be helpful for some business owners who are short on cash but have plenty of unpaid invoices to use as collateral. Small business owner can also apply for SBA loans, which is a type of loans that is backed by the Small Business Administration, while the SBA does not loan money themselves. They cannot borrow with SBA approved lender that offer SBA backed loan with competitive rate and terms. Are personally liable for SBA loans. When applying for SBA loan, you must provide an unlimited personal guarantee if you own 20% or more of a business. This means that if you fail to repay the loan because the business failed, you are still on the hook for repaying the entire loan amount. Also note that in the case of borrower defaulting, the lender can recover 50% to 85% of outstanding loan balance from the SBA. What can I use a small business loan for? Approved application can use their small business loan fund to pay for any ongoing expenses as well as payroll or investment in equipment for inventory. Small business loans are also frequently used as a means to manage or smooth out cash flow in times when expenses exceed income. If you are a small business owner who needs to buy some equipment, but you are waiting to be paid by a few major clients. For example, it could help you keep up with your expenses and buy equipment while you wait for your invoice to be paid. Other popular uses of small business loan include raising capital to hire new staff or to launch a new marketing or ad campaign that could help boost revenue. Next, how we choose the best small business loan. We looked at more than 20 lenders who offer small business loan, small business lines of credit, and unique funding option like invoice factoring. We looked for lenders who offer transparency when it comes to their loan product and eligibility requirement. And we also looked for lenders who post fees and ongoing cost prominently on their website. To find the base small business loan of 2022, we compared loan option and lender to find companies with excellent rating and user review on website like Transpilot. We also looked for lender who offer high loan amount and flexible repayment option, as well as the ability to apply and set up loans funding online. What is business financing? Unless your business has a balance sheet of Apple, eventually you will probably need access to capital through business financing. Even many large cap companies routinely seek capital infusions to meet short-term obligation. From for small business, finding a suitable funding model is vitally important. Take money from the wrong source and you may lose part of your company or find yourself locked into repayment term that impair your growth for many years in the future. Key takeaways. There are a number of ways to find financing for a small business. Debt financing is usually offered by a financial institution requiring regular monthly payment until the debt is paid off. In equity financing, either a firm or an individual makes an investment in your business, meaning you don't have to pay the money back. However, the investor now owns a percentage of your business, perhaps even a controlling one. Mezzanine capital combines elements of debt and equity financing, which the lender usually having an option to convert unpaid debt into ownership in the company. What is debt financing? Debt financing for your business is something you likely understand better than you think. Do you have a mortgage or an automobile loan? Both of these are forms of debt financing. It works the same way for your business. Debt financing comes from a bank or some other lending institution, although private investors can offer it to you. This is not the norm. Here is how it works. When you decide you need a loan, you, you head to the bank and complete an application. If your business is in the earliest stage of development, the bank will check your personal credit. For business that have a more complicated corporate structure and have been in existence for an extended period, bank will check other sources. The Dun& Bradstreet's file is one of the most important. D&B is the best known company for compiling a credit history on the business. The bank will want to examine your books and likely complete your due diligence along with your business credit story. Before applying, make sure all business records are complete and recognized. If the bank approves your loan request, it will set up payment term, including interest. If the process sounds a lot like the process you have gone through numerous times to receive bank loans, you are right. Advantage of debt financing. There are several advantages of financing your business through debt. The lending institution has no control over how to run your company and it has just ownership. Once you pay back the loan, your relationship with the lender ends. That is especially important as your business become more valuable. The interest you pay on the debt financing is tax deductible as a business expense. The money payment, as well as the breakdown of the payment, is a known expense that can be accurately included in your forecasting model. Disadvantages of debt financing. However, debt financing for your business does come with some downside. Adding a debt payment to your monthly expenses assumes that you will always have a capital inflow to meet all business expenses, including the debt payment. For small or early stage company, that is often far from certain. Small business lending can be slowed substantially during recessions. In tougher time for economy, it can be difficult to receive debt financing unless you overwhelmingly qualified. Now I have a request to you. Those who are absolutely new in my channel, please subscribe my channel and hit the bell icon just beside the subscribe button. Thank you for watching my video.